Welcome back. We're anticipating a positive start. Let's get the implied open up on the screen as well, because Asian markets are really feeling quite good this Friday. There we go, 115 points higher. That's the indication. So the bull charge is all set, or perhaps all likelihood it will continue. We have Siddhartha Khemka joining in, head of research at Motilal Oswal Financial Securities. Siddhartha, thanks very much for being here. Happy Friday. Lots of numbers have come through. You pick one. The best of the lot this week, because of which you think, it's a strong case for a buy.
Yeah, definitely. Good morning and happy Friday to you as well. If you look at a lot of numbers across sectors, across the segments, what I can highlight clearly from yesterday's numbers is Laurus Labs consistently showing sharp improvement. I think second consecutive quarter of better than expected numbers. The CDMO and FDF has been driving the earnings. FY25 ended on a very strong note. What we see is that after 3 years of deteriorating earnings, finally Laurus has ended FY25 on a very strong note, 92% growth in PAT, and especially the segment CDMO which were impacted because of the higher capex, that is now started to showing improvement with asset utilization and higher launches in the domestic formulation segment. So I think numbers are there to be seen, but we believe that things are turning around, and we see a revenue growth of 18% on back of margin improvement. We see a strong PAT CAGR of 57% going forward, and hence we believe that over the next 2 years, this could be a stock to watch out for. We have a buy rating and a target price of 750 on Laurus Labs.
Okay, all right, 750 is the target price out there. Hi, Sid, good morning, good to see you in. Let's focus on some of those frontline names then. You have TechM as well as Axis Bank that reported set of numbers. Both of them are expected to react favorably to the set of numbers. What's your take? Axis Bank, I think valuation-wise, it has some support and the numbers look pretty good as well.
Definitely. Good morning, Nigel. Good to see you. So I think no bad news was good news for Axis Bank, and that is something that the market should like. Overall numbers, I think, are in line with our expectation. However, we saw some slippages and NPAs improving, and I think that is something that the street will definitely like. The overall view is that margins have expanded 4 basis points, asset quality improving, and NPAs under control. So overall, very good set of numbers. Stabilization is seen in the credit card portfolio, and overall, we believe that is on a steady recovery path. Hence, we believe that it could be the stock where over the next few quarters things should improve. While we have a neutral rating, but the view is turning gradually positive on Axis Bank. I think Tech Mahindra, pretty strong outlook out there. Margins improvement were better than expectation, and that led to marginally better than expected net profit. The company is taking a transformation and diversifying across other segments, so BFSI, healthcare, those segments, and that is driving the strong growth. We are seeing very strong deal wins. 42% increase in deal wins in FY25. That has been the strongest among the large and mid cap. Obviously, the base is lower, but definitely shows that the transition is helping, and margin improvement plan that is also on track. The company is targeting FY27 margin aspiration of 15%, and with the structural initiatives, the diversification, pricing improvement, automation, and improving utilization, we believe that this is now achievable, and hence we believe that this could be one of those stocks where we could see a very strong earnings growth in the next 2 years, and because it's a transformation-led growth and not too much dependent on the discretionary spending. Hence, what we are factoring in are 27% earnings CAGR over the next 2 years, and believe this could be one of the topics within the large tier 1 IT companies. So again, we have a buy rating and a target price of 1950, a good 35% upside from current levels.
All right, that's interesting, Sid. Coming back to you, Sid, any thoughts, any perspective on RIL stocks? Of course, not done very well over a long period of time now. What is your sense?
Definitely, I think Prashant, if you look at the core business, pretty flat. Only the telecom business, which will see some growth and improvement on back of the ARPUs. The retail business is again, I think, witnessing a slower growth. So net, I think the overall expectation is a 5% Y-on-Y decline in consolidated net profits. The key question to look for is definitely how and when the capex intensity will come down, and that will lead to improvement in free cash flow generation. Last time we saw sharp re-rating in Reliance was when their capex had ended and they turned net debt positive, generating a lot of free cash flow. So that is something that the market will definitely look forward for. The second most important thing is the value unlocking whenever the Geo platform will get listed. I think that is something that the market will get excited. Core business, I think there are too many moving parts, and that leads to a kind of not a great outlook out there. As you see, Bharti Airtel has been consistently outperforming with the ARPU improvement, free cash flow generation, but the same valuation treatment may not happen, is not happening in Reliance, and I think that is what is kind of because the capex intensity in other businesses is something that the market is not looking very positively at.
Well, let's focus on a few more stocks. Sid Khemka is still with us. Sid, what are you making of Vare Energies? You know, the stock was being ruled out. It went all the way down to around 2,000 rupees or thereabouts. And then the results look very, very good. And what's startling about those numbers is they are guiding that FY26, the EBITDA number will be 5,500 to 6,000 crores. That's nearly 70% higher than what they delivered in the past year. But today we have the lock-in period that opens up for a lot of shareholders, including the promoters, so they will not sell. But what do you make of the counter at these levels? The street is totally divided.
Yeah, Nigel, I think definitely it's a story worth. So it's just a company with a lot of promise, and they have also started delivering. What happened was that valuations hit out of the roof, mainly on the back of hopes that US will be a key market for them. They have opened the manufacturing capacity there as well. But with Trump coming back into power and not focusing that much on renewables, I think that is where the sentiments went bad and the valuations kind of crashed. I think overall, renewable as a space looks very promising, and I think they would continue to deliver strong growth. The focus should be on companies which are more focused on India as a growth story, because I think India continues to have a focus on setting up renewable energy, be it solar, be it wind, be it hydro, or for that matter, now there is a lot of focus on nuclear. Coming back to Wari, I think it will remain mixed while the earnings delivery will continue. Clarity from the US in terms of the US renewable policy, that would only strengthen or reaffirm the market to give a higher valuation to Wari Energy.